Welcome to Behind the Doors, the podcast where we take you behind the scenes of residential real estate investing. I'm your host, Dan Noma Jr., here with my co-host, Marvin Cruz.
We're here to help you unlock the best strategies and practice for investors. Whether you're just starting out or you're a seasoned pro looking to scale your portfolio.
We've spent decades navigating the ever-changing world of real estate, and now we're sharing everything we've learned to help you succeed.
From off-market deals to cash flow management and everything in between, we'll break it down and bring you actionable insights that can make a real difference in your investments.
So get ready to open the door to new opportunities and take your real estate investing to the next level. Let's dive in.
All right, welcome back. What's up, Dan?
We're back, man.
We're back.
Back in action.
I got a great buzzword for you.
Yeah.
Liberation Day.
Oh, man.
Liberation Day.
Yeah.
So, for those listening, and I'm sure you heard of it, but on April 2nd, that was Liberation Day.
Yeah.
And President Trump announced sweeping set of tariffs. And then we branded this as Liberation Day.
Yeah.
So buckle up, because today we are talking about tariffs and trade wars. And, Dan, ever since this made the television, a lot of folks are asking me, does it impact real estate?
Yeah.
And I'm here to tell you it does.
I think
so. It does
so.
impact your future properties.
Yeah. Now, in fairness, a lot of these have been delayed.
Yes.
Right. So Liberation Day came, and then Liberation Day also was postponed in a lot of cases, all but one case, really. But I think it's I don't know. Like, I don't think we'll get into the politics of this.
No.
But I do think that it's important to recognize that, like, as a real estate investor or as somebody in the real estate space, the ripple effect of these things is something that we should probably consider.
Yeah.
And again, like, we don't have a crystal ball, that's not it. But I think you're going to see some changes, and we probably should chat through some of that stuff.
Yeah, because, when you implement tariffs, that's on all imports, by the way, is what this did. You're going to see a higher rate on things we as investors care about, which is product, right? Lumber, steel, aluminum, right?
Yeah.
So,
I mean, any construction material.
Yeah, absolutely.
I was with a home flipper that I work with a little bit, and he took me to a storage unit that he had, and he was stockpiling door locks and hinges and like bath faucets. Yeah.
Oh, wow.
Yeah. So he had been buying a bunch of them, thinking, well, as these tariffs come in, a lot of the material that he buys is out of China. And so he was like, I know the prices are going to jump on these things, therefore I'm going to buy as many as I can right now. So he was going into like Home Depots and Lowe's and like clearing them out of some of those materials as he could. And he filled the storage container full of it. So he's not alone. There are a lot of people that have done it.
Yeah, I can see why Canada and China pushed back a little bit, and they're now targeting U.S. goods and tightening up supply chain at the end of the day. So maybe he's ahead of something.
Yeah, I mean, a lot of our lumber comes out of Canada, to purchase. And so, if we're limited there, then even the local numbers start to go up, right? Because there's a lot more demand on the market. Therefore, the stuff that we're growing domestically, the trees and things that we're growing domestically and cutting and putting that lumber in the market here, the value of that's going to go up too.
Gotcha.
And so I think that, it's a slippery slope. Like, we got to be really careful with these because it leads to more inflation, so that could send us into, a kind of a tailspin.
Yeah. So this isn't just for my listeners, is a DC headline, but this does hit our industry directly, especially if you're building, rehabbing, or doing some long-term capital improvements, or at least you're planning on long-term capital improvements. This could hurt you a little bit. So Dan, let's talk about numbers. What are we seeing? What are you hearing out there on price increasing?
Yeah, most of the commercial builders that I've spoken to have said that their projects are now bumping up at least 5%, right? So they're adding an additional 5% in for cost of goods. So all of their supplies for the asset, they think are going to see at least a 5% adjustment. And I think a lot of them are even doing like more than that when they're bidding new work, because they're fearful that number 5 could be 10 or it could be 15 by the time the project's ready to go. Or they're putting contingencies in place, saying, hey, here's our pricing on this stuff right now. this project may get built in 8 months, 10 months, whatever we start.
Right.
That could be a different climate than when we're buying these materials. And so the variability could be pretty wide, on the cost of the goods. So it's going to be a big deal.
Yeah.
But even the public builders, right? They came out, and that week that was tough, right? Like that was a tough week for the stock market and those that are involved in it. I think we all are related to it in some way,
Right.
But the publicly traded home builders took a real beating as a result, and the beating was really just that the estimate to build a home, or the cost to build a single family home, went up an average almost close to $10,000 to build it.
Yeah.
Right. So the cost to build it went up by 10 grand.
Yeah.
The builder margin is something that doesn't get talked about a lot, but most of these builders are public and you can see their earnings and all that stuff. They operate on a pretty thin margin. They're not making 50% margin on these homes, right? They're making 10's a good one. So 10's be a great deal. That's a lot.
Yeah.
A lot of them are, fluctuating between 6 and 10.
Yeah.
And you got to remember, that's their margin. That's tough. You're paying that's a really thin margin.
Yeah.
To think about. And so, especially if you're building a house and it takes 18 months to build, that margin, one slip on something causes you to lose money.
Yeah.
And so that's where I think that's why they took a beating in the market as a result.
Yeah. Just think about it this way: if investors, right? If you rehab, used to be 40K and now it's 45K, that's a big difference in it. To your point, Dan, it impacts your margin, but it's not just all about cost here either. This could impact availability as well, right?
Yeah. I think it's, you could see a lot of construction projects that were slated to be built get delayed.
Yeah.
Right. And we already have a housing shortage. There's a significant housing shortage out there. And so it's weird. It's a weird climate. You've got a housing shortage, and then you've got an already growing affordability problem of the housing that exists. And now you just told everybody that it's going to be more expensive to build the homes that we need, right? Which made those that are that you own already probably a little bit more valuable. And as a result, I think you kind of deal with more delays, more people that are kind of going, interest rates are high. It's not time for me to sell because then I got to become a buyer in this market and I don't want to buy. And I'm just going to stay put. And so you're seeing a lot more of that where people are staying put. Yeah. Now, what's interesting though, is you're seeing as many of those people that are staying put, we also have this other economic anomaly where we have more right now debt outside of, real estate and all of their stuff, credit card debt, right? So credit debt, school debt has never been higher.
Yeah.
Never been higher. So now you got to remember, so you've got all these people that have equity in their homes. They're sheltering in place, so they're not moving.
Right.
But now they have all this debt. Where is the money going to come from? They're barely making it as it is. Where's the money going to come from? They have to sell, right? And they have to capture some of that equity. And that equity starts to erode. That's when you see the rush to market, right? Because now that's when you're going to see a lot of people jump back into the game and go, look, I've got to sell because I'm worried in 6 months this home's going to be worth 15% less. Therefore, I'm going to sell today and get all the, capture as much of this equity as I can. I don't know. A lot of them probably become renters, right? And probably be, go back into that world. But there was always there's always a way out, right? There was always programs available to even people that went through foreclosure and short sale after that cycle had passed that got them back into the cycle of being able to purchase again. So it's not the end of the world. It's kind of it's almost you hate to say it, but it's almost a healthy economic cycle because it just has to happen. Yeah. Affordability. I think about what it takes to afford a home. It's, let's say you're a family and you're a firefighter and a nurse. Those two incomes in our area, you can't afford to buy a home.
Yeah.
Which is crazy.
Yeah, it's hard to believe.
it's like those people easily should be able to purchase a home. Those are two great professions.
Yep.
And
they're helping the community, by the way.
Yeah.
But they can't live.
They can't afford to buy a home. That seems like a little bit of a problem, right? So it's like home prices over the last 10 years have gone up over 200%. But wages haven't done the same thing, and they won't, right? Because like, I don't know about you or even our listeners out there, like we're not making more money as a business. You know what I mean? Like that's not the case.
Right.
It's not like margins just grew by that much too. So it's not like we've got excess funds to just give to our employees. If anything, it's gotten harder, right? So it's a weird cycle that it's a weird cycle that we're sitting in. And, you know, I think that these tariffs are in a lot of ways necessary in some cases. Like, you know, there's been a lot of people abusing, you know, the trade, our trades, you know, and they're, you know, and so it should be a more equal kind of world out there. Yeah. And, you know, unfortunately, some of these countries have really, they've benefited for a long time as a result. And that's okay, you know, but we've got to like figure out a way to do it peacefully and do it in a way that that makes everybody happy.
Totally agree. Agree. Yeah, you know, and developers, small time investors, flippers, we're all feeling that crunch. Yeah. You know, but you know, there's nothing we can do. You can't really do anything about it, but maybe there are some adjustments the savvy investors can do. Yeah. So can you talk about some ideas that, you know, what we can do as we embrace for this impact?
Yeah, I think, you know, a lot of the guys that were working on like build for rent property projects and things like that, not that they're stopping to build, but I think they're considering or opening their eyes to other opportunities as a result, right? Because now it created just like this additional layer of uncertainty. Yeah. Whereas like, you know, an already built property, you've kind of already taken all the uncertainty out of it. You already know what you're getting. So I think that you're seeing a lot of them pivot or look to existing property types versus building new again. Yeah. And so, you know, that's one. I think the other thing is like when you're buying, you got to look at the property that you're buying and understand its renovation cost, right, of renovation. You know, so it might mean that you've got to buy it at a little bit of a deeper discount in order to renovate it, to get it rent ready or to get it flip ready. You might have to pay a little bit less for it as a result too. Yeah. Yep. You know, and I guess the other thing I think about too is a lot of these guys are looking at different ways that they can finance the assets, you know, versus, you know, borrowing at high rates. Like what other options are there to finance this inventory out there? And so DSCR is a great one just because the rates are so competitive right now. I mean, those are great loans.
Yeah. So if I heard you correctly, it's already standing. So people are, you know, go back to existing homes. Yeah. Because you can skip some of that inflation of material cost. Yeah. But then also, you may see investors getting away from those major rehabs too until this passes over. Yeah. But then I love this creative financing. Maybe you can offset some of this upfront cost, if you will. Yeah. What about, does this impact the renting market? Do you think this trickles down to those folks as well?
Yeah, I mean, you know, a lot of the new rental product that was hitting the market was all build for rent. And if that product starts to slow, it reduces our housing supply. You know, and so when they talk about housing supply, they're not just talking about for sale housing. They're talking about everything. And you know, there's a lack of inventory out there. And so as a result, I think that you could see some upward pressure on rents as a result. Like, you know, landlords are in the business of renting the property and making a profit. And, you know, if I've got 10 applications, I don't need to discount or offer concessions to rent my property out. I can just rent it and maybe I can get more. You know, I mean, there was a lot of cases where we were renting properties for over asking price in the last few cycles because there was such demand to rent, it increased the cost to rent. Yeah. You know what's funny about this episode here, because, you know, people sit on the sideline. We always talk about now is the time because,
if you are renting a home now, you're pretty much in a sweet spot, and you don't even have to do anything at this point. You kind of can weather this storm. So congratulations to you if you are owning property and got a solid rental portfolio. Because you definitely can see the cash flow without even lifting up a hammer. But all right, let's zoom out really quick. So tariffs have pushed consumer prices up a little bit, right? And let's talk about that a little bit. What have you seen?
I think that they, it's like, it doesn't stop at just materials. Like, I think that's what we've been talking about. It's like, oh, the materials are cheaper or more expensive. But like, we import a lot of stuff. We're importing a lot of, like, even the food that we eat, right? So, your construction worker now, like, in order to pay for his lunch, is paying a little bit more, right? And so that cost of all those things is going up. And, I think the statistic that we pulled here was that the average household, the cost of living just went up by $3,800.
Yeah.
Right. So now you've kind of lost, you've lost a little bit. And that includes all of your normal household consumables, like everything is, got some sort of relationship to trade. And so, for sure, you're going to see the cost of normal consumer goods go up.
Yeah, and I've been talking to investors, and their confidence is wobbling a little bit.
Yeah.
Right? They're waiting on the Fed to step in. It feels like everybody's just playing defense.
Yeah.
Like, I don't want to do any purchasing right now because I want to see what happens with the foreign market, what happens with our local supply chain, what's going to be next, what's in the news next. Are you seeing the same thing? Are you playing defense? Are you sitting on the sideline?
Yeah, I think you could be cautiously optimistic in a market like this, and I don't think like sitting on the sidelines is productive. Like, I've never met an investor that didn't want to buy. They all want to buy. It's a matter of like, when can I sink my teeth into this thing? When can I buy it? And I think you're seeing a lot of those investors right now. Some of them got hurt in that, the market adjustment, So like, there was a lot of people that, were in the market, they took 2 weeks of losses, and then they didn't catch the rebound.
Right.
Because they were just frustrated and didn't buy back in. And so they didn't catch the rebound, unfortunately, maybe sold too early. A lot of that kind of stuff was going on. So those guys are going to be stuck on the sidelines for a little bit. But, there was a lot of people that made some money through this process too. You don't see opportunities like that often in the stock market where you can buy at a discount. And so when you do, that's when you do it. You got to jump in and you got to be willing to take the risk and buy it. But same thing with the housing market. I think it's probably put a lot of the real estate investors in a world where they're kind of going, okay, like, should I wait? Should I buy? Should I whatever? And to me, it's like real estate or land or, whatever it is. Like, there's that age old saying is buy land, they're not making any more of it. Think about what we sell as real estate people is we sell a tangible asset, right? It's always got a value. There's a certain value that this thing has. It's not like a stock, right? I mean, if you buy a stock, you're dependent on the decisions of the leadership of that company for its success, right? Technically. But if you buy real estate, you've got something tangible. You can drive it, you can touch it, whatever. We don't even get stock certificates anymore. They used to give you certificates. You don't get those anymore. So being that it's tangible and there is a finite amount of them, the value will rebound at some point. It will always rebound. But I think if you look at real estate over time, it does continually increase. And I think if you play the right game, you'll win in the long run. And so like, if you're playing the game of like, I want to make a quick buck, maybe now's the time that you watch. But if you're in the business of making the long-term gain, and it's really just about timing and all those things, then yes, for sure, now's the time to get in. Because if you can cash flow a property today, let's say these tariffs hit and, all of a sudden property values spike and there is now just even less of a supply sitting out there. You've got it. You're in the right position. But, let's say they go and home values drop and all of a sudden now there's like a bunch of people foreclosing and they've got to go and live somewhere.
Right.
Again, you're still in a pretty good position to be able to rent to those people.
Yeah.
So I don't know, there's good and bad that can come of all of this stuff, you know, but like I've said in a couple other episodes, I think we've talked about this a lot. It's like affordability is the underlying issue, right? And I can't get my head around how you have to solve for this somehow, you know? So like, do home prices come down? Cost of goods come down? What? I mean, what's got to give? But something's got to give, because the alternative is that wages everybody's just got to take the same jump in wages. I just don't see that as realistic. You know, I don't know.
Yeah. So whether you're an agent or an investor, stay informed, stay flexible. But you know, what's so fascinating about real estate is something to remember is there's always a play in real estate. Even in the trade war, there's always a play or an exit strategy. And so, you know, let's wrap up, because I want folks to remember a couple of things, right? Yep. So tariffs, they are making real estate more expensive to build and rehab, right? Yep. Smart investors are pivoting fast, so they're buying existing homes and holding on to the rentals they have and finding new ways to finance. And I think you said the rental market might actually benefit from the slowdown. Yeah. And so if you have a good portfolio, you probably should keep it. You're winning. Remember, a few months ago, we told you to buy. And if you listened to us, there you go.
Yeah, the wealthiest people I've ever known, I've asked them, you know, I said, like, when do you sell? And all of them, like historically, have always said to me, I'm very rarely a seller, I'm never a seller, and I'm always a buyer. And I'm like, I get it. Okay. You're playing the cash flow game. I got you.
Thanks for tuning in to another episode of Behind the Doors. We hope you found today's insights valuable for your real estate investing journey.
Remember, real estate success doesn't happen overnight, but with the right tools and strategies, you can build long-term wealth and create passive income.
If you enjoyed the show, be sure to subscribe, leave us a review, and share it with others who are passionate about real estate investing.
Don't forget to follow us on social media for more tips and exclusive content.
Until next time, keep unlocking new opportunities, and we'll see you on the next episode of Behind the Doors.